So oil prices, as we mentioned, fell back and stocks rallied in hopes of that de-escalation in the conflict between Israel and Iran. For more on the investment strategy or his investment strategy at this time, let's go to Barry Schwartz, Chief Investment Officer, Portfolio Manager, Baskin Wealth Management. Thanks for joining us.
Anytime, Morella. Thanks for having me. Canada
hosting the G7, all eyes on Alberta and that summit. Do you anticipate a trade agreement between Canada and the U.S.? We had Mr. LeBlanc say a short time ago, they're talking. We understand that there could be some sort of progress here. Do you think it's going to be good news in this short period of time?
What does Donald Trump like to do? He likes to make deals, and we know the playbook. He starts at the crazy, insane level and then works his way to a more rational deal. So we expect Canada to make a nice deal with the United States. We expect lots of countries to make deals with the United States, and you can see it in the market, right? Where the worries about the tariffs have essentially gone away. No question it does. I feel for businesses that are impacted, but the market has already discounted the tariff worries. There seems to be little chance that the tariff worries are going to increase. And so I've always said it to viewers of BNN, the market climbs the wall of worry, and the news doesn't have to get better. The skies don't have to clear for the markets to go up. The news has to get less worse. And so when there's that heightened uncertainty that we had in April and May with the tariffs, no question the markets reacted properly. And same thing Friday with the shocking Israel-Iran, tit for tat. But the bottom line is the markets move past it. And as long as things don't get worse, the markets can digest it and focus on the next worry.
Okay, you mentioned that some of that tariff concern has already been absorbed. We talked about Israel and Iran, which just happened Friday. We saw the price of oil sort of come back down today. Has the market already ingested that? What do you anticipate for the price of oil?
Well, oil is a product similar to gold that can work really well when there's doom and gloom, and when there's lots of tension in the Middle East. To me, my word doesn't count as anything, but clearly, in my opinion, the world has become a safer place if Iran doesn't have access to nuclear weapons, and so that's not necessarily a bullish case for oil. So that's actually a bearish case in my opinion, and so I don't understand why oil rallied so much. At one point on Friday it was up 13%. This is not going to spill over into other countries. I think it will be net positive for the world going forward, and that's why you're seeing oil prices come back to the $60 range, and that's probably where they're going to stay unless there's other world events.
Okay, so if tariffs are already worked through, if the price of oil fluctuation is going to be sort of temporary, what's your investment strategy at this time?
Same as it ever was, and that's to own great businesses run by quality management teams that have skin in the game, that have navigated issues in the past. We tend, Morella, to only stick with profitable companies, the blue chips, and our opinion is once you found a great business, you should hesitate to sell it, even if the price has gone up dramatically. How many mistakes have you heard of people selling? Oh my God, I sold Berkshire a few years ago or Amazon a few years ago because I made money on it. That's the mistake I want to avoid.
Got it. Okay, let's talk about a couple of stocks that you do, like Copart is one of them, and they do vehicle auctions. They have junkyards, that kind of thing.
That's right. If you're unfortunate to get into a car accident and your car is deemed what's called a total loss, Copart is the company that will work with your insurance company to clean up your vehicle for either sale overseas or for junk. And they don't take on any balance sheet risk with the cars. They get a fee for junking your car. And, with all the bells and whistles, all the technology on our cars today, one little tap, one little ding, one little smash, essentially means it's a total loss. And a lot of the technicians at body shops can't fix these cars like Teslas and other EV vehicles that have specialized camera technology. So the bottom line is more vehicles are converted into total loss. That means more volume on the Copart lots. More volume for Copart means more profits. This has been one of the most successful stocks on the NASDAQ going back 20 years. And really the business plan is to continue to add more auto yards and auto auctions across the globe for years to come.
So I know their competitor is Ritchie Brothers. How do you compare them, and why did you land on Copart?
Well, we've made the mistake before, Marilla, of buying the worst company in a duopoly or an oligopoly or in an industry, thinking it was more attractive because of the valuation. I actually owned IAA, which was acquired by Ritchie Brothers a number of years ago. And I should have just said to Ernest, our head of research, what are we doing? Let's just buy the best company, Copart. So we finally smartened up and purchased Copart after selling IAA. No question that Ritchie Brothers management team, very strong. They've improved the operations at IAA, but this is a David and Goliath story. The Goliath is Copart, and Ritchie Brothers has a long way to go to even take any meaningful market share from Copart.
Got it. Okay, you also like Domino's Pizza. Now, why Domino's Pizza? There's so many players. It seems like almost every day there are new players in this space. Why do you like Domino's?
Because Domino's has kept its price of pizza and other food items very, very inexpensive, even with the crazy inflation. I think, the price that for the pizza charges based on the amount of calories you can get. And unlike when you order food from Uber or DoorDash or Skip to Dishes, that Domino's is going to get you your pizza fresh and hot and, within a reasonable time frame. And so with people struggling with their pocketbooks, struggling because of inflation, they know that they can go to Domino's and get a great meal for a reasonable price. Domino's is the dominating pizza company in North America and growing like a wildfire outside in international markets. The company is taking market share from Papa John's, which was in the news last week. There's talks that Papa John's may be acquired by private equity. They're taking market share from Pizza Hut. They offer terrific coupons and deals. They use the best technology. They have and their stores are very, very profitable for the franchisees. This is a royalty business. It doesn't own very many of the stores. It just gets the cash flow from the royalties for the franchises and has been using all that free cash flow to raise dividends and buy back stock. We see this company as a double over the next 5 years as it's able to buy back more stock, raise pricing a little bit more, and use technology to its advantage.
Interesting.